Hello, everyone. Thank you so much for being with us tonight. I so far see 5 people have joined us, 6 people have joined us. I'm going to give it a minute or so that we can allow everybody. We have 40 people registered for today's webinar, so I want to make sure everybody has a minute or two to join, and we'll get started. Yeah, around 6:02, we'll go ahead and get started. And then, Marley, I want to make sure, can you see the attendees on your end, or is it just, no? Okay,
I see
no
just
worries.
participants at the bottom joining, but I don't see any.
You don't see anybody. Wanted
No.
to make sure. Okay. Hello, everyone joining us. We'll get started in about a minute. All right, then I'm going to start sharing my screen as well. Marley, can you see my screen?
Yes.
Perfect. Okay. Maybe some of you will recognize some of your faces on these pictures. It's a lot of the childcare providers we've worked with in the past years. All right, we're gonna go ahead and get started. Since it is 6:02, we do have a lot of information to cover today. Again, hello everyone. Thank you so much for being with us today. It is today, the purpose of today's webinar is it's our WEVWorks webinar, Tax Readiness for Childcare Providers. I kind of just wanted to give a quick little intro on here on our screen. You'll see what we're going to be reviewing today. Again, welcome to today's webinar. My name is Berenice Ayala. I am the Bilingual Program Officer here at Women's Economic Ventures, or WEAV. For those of you who are returning to WEAV, welcome back. And for those who have never heard of WEAV before, or maybe this is your first event or webinar that you're participating. WEAV, Women's Economic Ventures, is a local nonprofit and a women's business center located in Santa Barbara and Camarillo. We do serve Santa Barbara, Ventura County, and what we do is we offer training, consulting, and access to capital for people who are wanting to start or expand their own business. And everything that we offer in English and also in Spanish. So that's kind of a little synopsis of who WEAV is. So again, thank you so much for being with us today. Um, I'm going to hand over the mic to Marley in a little bit, but here's just what she's going to be reviewing. She's going to be reviewing the 1040 form, Schedule C, income taxes versus self-employment taxes. And in the end, we are going to save some time for Q&A. So if you have any questions, you can put them on the chat. I did want to share a little bit more information about questions if you do have them throughout this webinar. Questions are really encouraged. This is a webinar, so we really can't see your faces, but if you do have any questions, please utilize the chat function. You can enter your questions there. As we go throughout the different segments of today's webinar, if you have a question that is applicable to that topic, we would be happy to answer it then and there. And please make sure that your questions would benefit the entire group. If they are very specific questions that we know would only benefit your situation or that are too specific or it'd be a little bit difficult to answer, you're more than happy to reach out to Weave after this. I'm going to share all our contact information at the end of this. So if you do have any very specific questions, feel free to reach out to us and we can answer those questions offline. But for the purpose of today's session, let's keep our questions specific to the topic and make sure that they benefit the entire group. But please, questions are welcomed. Before I do introduce Marley to the group and pass over the mic to her, I do want to start with a poll. Let me go ahead and, all right. On your screen, just so we kind of get a idea of who's in the room. I see we have 12 attendees. We kind of want to get an idea of who's in the room. So we did put some 3 questions on your screen about who you are as a childcare provider. We're specifically asking, how are you filing your business taxes this time around? Whether it's a sole prop or LLC corporation. If you're not sure, we also put that on there. Also, we want to know if you have filed business taxes before or if this is your first time. And also quickly, we did also want to know if you have any employees. These are just questions to kind of help gauge Marley who's in the room and make sure that we're able to address the different providers that we have. I'll give you all another minute or so to answer the questions. We have 72% of participants have participated, so I'll give you all another 15 seconds or so. Okay. For the purpose of time, I'm going to end the poll and then broadcast the results. So most of you are filing as a sole prop. I don't know if you can see this, Marley. Can you see this on your end? Perfect. So 56 of you are filing as a sole prop. 67, this is your first time filing for taxes for your business. The majority of you all. And majority of you do not have employees. 89% of you, it's just you and your business. So I just kind of give you an idea, Marley, of who's in the room with us. Right. All right. Thank you all for taking that time to answer. Let me go quickly back to sharing my screen here. I'll need another minute of your time. All right, so like I mentioned, we do have a lot of information to share with you all, and I did want to introduce our presenter for today, Marley. Marley has been with Weave since 2021. She brings over 20 years of experience in finance, accounting, and tax preparation. Throughout her career, she's seen how complex people's relationship with money can be and how personal and private it often feels. She has worked with many childcare providers, helping them improve their finances and feel more confident managing their business finances. And to us at Weave, she is known as our childcare expert. At Weave, Marley has helped small businesses and childcare providers explore their relationship with money and has provided tactical tools to improve their money habits and achieve better financial results. She especially enjoys training business owners to use bookkeeping software to make smarter business decisions. Marley is a registered tax preparer and a certified QuickBooks Pro advisor, and we're very lucky to have her with us today so she can share her expertise and share her knowledge with us. So please join me in welcoming Marley. I'll go ahead and stop sharing my screen, Marley, so you can get those slides ready to go.
Okay, thank you, Berenice. Welcome, everybody. Perfect timing. Today is the first day the IRS accepts tax returns. It's the beginning of the filing season. So you're here at the right time. And our goal is for this information to be useful for you so that when you file your taxes, not only you are prepared to file correct and accurate tax return, but you understand what you are reading on the tax return and to make sure that everything is reported correctly and you benefit from learning more so that you can lower your tax liabilities in the future. I'm going to share the presentation since we have quite a bit of material to cover. Let's see. Okay. It's sharing, right?
Yes, all good.
Okay. So this, based on the poll, this webinar is going to be very helpful because it's primarily aimed for sole proprietors, self-employed family childcare providers that report their income on a Schedule C. It's a little bit different for LLCs or corporations that have made the choice to report their income as S Corps. It's a little bit different. So this presentation is focused on those of you who file a Schedule C with your 1040. And at the end of the presentation, I have a sample of a single tax filer that has the only source of income they have is the business income from their childcare, so that you guys can see more or less what a tax liability is for that kind of business, okay? I'm going to start by introducing the Form 1040. This is the tax return. This is your actual tax return, and it's kind of like a report card of your finances. It reports all income that you earn during the year from all sources, whether that is if you have been an employee, your wages, if you have savings accounts, the interest earned in the savings, if you have investment, the dividends or capital gains, if you are retired, Social Security benefits and retirement income. But also if you're self-employed, that's where you report the business income. If you have rental, the same. And if you have other pass-through entities, such as a partnership or a S Corp, it comes through at the end, it all shows up in the 1040. Now, the business, your business as a Schedule C, reports the business income on a separate form. But I'm going to walk you through the 1040 because it's important for you to understand what the form is doing so that when you're signing the tax return, you actually understand the numbers on the form. So this is the 1040, okay? And the 1040 has three main parts. So the first part just gathers your information, the status, with if you're single, married, filing joint separately, head of household. If you have any dependents, it lists your dependents. So this is a little bit more of your biographical information. Then the next section of the 1040 is where all the income comes through. Okay, so this is, as I mentioned, income from all different sources. Then we have the section where once your income is tallied up, then the taxes are calculated. We have a progressive tax system, and I'll explain that in more detail a little bit ahead. But this is where your income taxes, which is in line 16, and other taxes that you may have for a self-employed individual. The biggest one is self-employment tax, which is reported on line 23. So all that gets added, and line 24 will show what your total tax liability for the year is. Then the next section accounts for all the payments you've made through your W-2 withholdings, any 1099 withholdings, any estimated payments you have sent throughout the year, as well as any credits that you may be entitled to receive, such as the earned income credit, the child tax credit, education credits, because those credits actually help you pay for your taxes. It's a one-to-one. It's like the government giving you money to pay for your tax liability. And then finally is a reconciliation of income taxes, payments, or credits. And you will, the last part of the return figures out whether you have refund coming from overpayments or credits, refundable credits, or if you owe taxes because the estimated payments sent or the withholdings were not enough and you don't qualify to enough credits to offset the tax liability. So that is in a nutshell Form 1040. It's a reconciliation of all your income, taxes, and payments and credits to arrive to whether you're going to get money back or you owed money to the taxing authority. So at this point, if any of you has any questions regarding this form, if you want, we can answer those questions right now. Let me see the chat. Okay, yeah. So right now, there doesn't seem to be any questions. If you at the end have questions, go ahead. We'll answer those for the entire presentation. But since no one really has any questions right now, I'm going to continue.
I do, sorry, before we move on, Marley, I want to make sure, I'm hoping everybody can access the chat. I'm trying to activate and make sure that you guys have access to it. If not, the Q&A function is also a way that you can ask questions. So if you go under Q&A, which is going to be a permission that you guys are allowed to do, go to open and you can ask questions that way as well. So depending on your view, you can either use the Q&A function or the chat function. And we're happy to answer those questions as we go. So far, I think we're good, Marley.
Okay, so now I am going to walk you through Schedule C. This is the schedule where you're going to report the business income from your family childcare business. No other income goes there, just the business income. Schedule C is for sole proprietors and single member LLCs. So if you have registered with the state of California as an LLC and you are a single member to that LLC, the IRS considers you a disregarded entity for tax purposes, meaning that you're going to continue reporting your income on this form, even though you have an LLC, you have registered the business as an LLC. So Schedule C is your business report card. The 1040 was your entire financial life report card. The Schedule C is exclusively for your business. This is where all income from your childcare will be reported and all the expenses as well. And to calculate the net profit. So after you report the income less the expenses, you calculate the net profit. That is the income that is gonna flow through Form 1040 as business income, and also to Schedule SE. That's where you're going to calculate your self-employment taxes. So as a self-employed individual, you're going to pay income taxes and self-employment taxes on the net profit from your business. Okay, this is what the form looks like. And as I mentioned, it has 3 parts. This is the information about your business on the top, then the income section, and then the expenses. Line 31 here at the bottom, it's where the net profit it's finally calculated after taking all the deductions, including one of the biggest one, which is the business use of your home. Now, it is important that you have good tracking during the year on your income and expenses so you don't miss any deductions you're entitled to. Many childcare providers, the first year of operations, find themselves with a 1099 NEC with the income. So the income is going to be reported to the taxing authorities. So they will know how much you made. If you work with subsidy clients, you will receive the 1099 with the tuition that was paid to you. If you have food programs or if you receive taxable grants, all these types of incomes will be reported on a Form 1099, either NEC or miscellaneous to you. So that's why it's very important that you also have good records of the expenses so you do not miss on any deductions, such as you can deduct all the equipment, toys, advertisement, any license, insurance, memberships, your tax preparation fees for the business portion, office supplies, cleaning supplies. And the biggest one, if you don't have any employees, because otherwise employees might be the biggest expense, is your food. The daycare food, you can actually, you can claim them in 2 different ways. If you haven't been tracking your food for the children because you mix it with your personal food, sometimes you forget to get a receipt or you pay cash. And at the end of the year, when you're trying to figure out how much you paid in food, you don't get the right amount. The best way to then claim the deduction is through the standard rate. I'm going to show you here. These are the standard rates for 25. This is what the IRS grants family childcare providers to deduct per children and per meal. Okay, so we are here in California, so that's part of continental US. So breakfast 1.66, lunch or dinner 3.15, and snacks 93 cents. You can claim up to 3 snacks. The standard mileage rate, if you drive to get kids, pick up kids, drop off kids, gather supplies, purchase meals, meeting with parents, training, continuing education, all those meals are deductible. And if you don't track all the expenses because it's convoluted sometimes, or you have mixed expenses that are business and personal, the standard mileage rate may be more, it's easier to deduct and to support. You do have to have logs. So it's important that, and you need attendance logs. So it's easy for a family childcare to recreate the deduction for meals because you already have an attendance log for all your children. So all you gotta do is recreate the log for the meals that you provided to each children each day, and that way you can actually claim the right deduction for food. And sometimes claiming the standard meals rate might be even more beneficial for you because if you are a conscientious shopper, your actual expenses may be less than what the IRS is willing to give you as a deduction. So that's why it's important to really track everything accurately so that you can decide whether the standard meal deduction is better for you because it's higher than the actual. It's your choice. You don't have to claim the actual. If it's less, you can actually deduct the standard meal rates given by the IRS. And sometimes that works out to be a higher deduction. Same for vehicle expenses. You can claim the standard or the actual cost. Then after the meal and the vehicle, another important deduction is the home business use of home. But before we get there, I want to make sure that you really have a mechanism to track income and expenses throughout the year. If you have a business bank account, and we highly encourage all businesses, even if you're not registered, to open a separate bank account. So all income goes into that bank account, all the tuitions from parents, from subsidies, food programs, grants, and all the expenses, all the direct expenses come out of that bank account. These are expenses that you're incurring because you have a daycare. So that will give you an idea of how much money you really are making from running this business. But aside from these direct expenses, you also get to deduct the business use of the home, because that's where you are running your business from. So the IRS actually is generous with family childcare in allowing a deduction that for the rest of us is a personal expense. We don't get to deduct where we live because we don't conduct business. If you have a business and you have a home office that is exclusive use, then yes. But for childcare providers, it's not required. Because you have a business at home, you can actually deduct portion of all the expenses related to keeping up a home as part of your business expenses. If you rent, the portion of the business use that is allocable to the business, or if you own, the mortgage interest, property taxes, as well as all the utilities, any repairs and maintenance. And if you own the home, there's going to be a depreciation component. And also, if you use your vehicle, these two areas, most of the time, have a business and a personal usage. So there is a mixed use. So your vehicle you use for personal purposes, you also use for business purposes. So that is why it's important to keep a log of the total miles you drove during the year and the business miles, so that when you claim the deduction, you can properly compute the deduction and whether the standard or the actual is more beneficial for you. But after taking the direct expenses, the business use of home, and the vehicle expenses, then you arrive to your net profit. This is what pays taxes. Okay, this bottom line is what pays taxes. As mentioned, the business use of home is going to be one of your biggest deductions. And there's special rules to calculate the business use percentage of your home. That is based on time and space. And there is a computation that we can share with you that asks what's the total square footage of the home, how much of that is exclusive use. Let's say you have a room that you have converted, and many of you do, into a mini classroom where you have all the small chairs, tables, bookshelves, toys. So you don't really use that room aside from when you have your kids. But then the rest of the house, such as the kitchen, the dining room, some bedrooms, bathrooms, those are mixed use because you also use them while the children are not present. So that's called regular use. In order for you to properly calculate the business use percentage, you have to take into account the entire square footage, any exclusive use, any regular use, plus the time that you use the business, your home as business. The number of hours you're open for operations, you have kids present, plus any preparation time, before and after, for cleaning, bookkeeping, learning, etc., etc. So once you calculate this number, the total business use percentage of your home, then you can prepare, or your tax preparer will prepare this form, expenses for business use of home. It's its own separate form. The percentage goes in here, all the expenses go in here to come up with the deduction. But as you will learn, this is one of the biggest deduction. And when you look at your Schedule C, it's reported on, go back in here. It's reported on line 30. So this is income, direct expenses, including vehicle, less the business use of home, and then you arrive to line 31st. Any questions right now regarding how income and expenses is reported on a Schedule C?
I don't see any open questions at the moment, but I did want to share that we had a participant really like um, the meal form that is used to track meals, and she asked if she can get a copy of that. I did want to share with everybody in attendance right
Yes,
now. I will be sending a follow-up email um, by tomorrow, hopefully by tomorrow, that will include all of the forms. I do have to get them from you, Marley, because I know you have some up-to-date ones. Everything that Marley shares, we're happy to send out in a follow-up
this
email
is
because
this is the this is the form she's referring to, right?
yes, I believe
And
this is the
then
meal tracker form. Yes.
yeah, and then this here the meal rates. Yes, I'll send you that information.
Perfect. And then everybody in attendance, um, I'll go ahead and send those out to you because yeah, they're great tools. So we'll make sure to distribute those out. But I
Okay,
think at this moment, that's the only question we have.
okay, perfect. So this is the most important part is how your taxes are calculated. So as a self-employed individual, you are responsible for paying all taxes that otherwise people that are employed, their employer helps pay for them and they paid a portion. But as a self-employed individual, you are responsible for paying all taxes, and that is income taxes and self-employment taxes. Income taxes are calculated on Form 1040 on taxable income. That is the income earned from all sources after adjustments and deductions. Our income tax rates are progressive, and you pay taxes to the federal government and also to the state. The self-employment taxes are your Social Security and Medicare taxes. As a self-employed individual, you pay those. It's a flat rate, 15.3%. When you are an employee, you don't pay the entire amount. Your employer pays half, and you pay the other half through tax withholdings. So if you have ever been employed in the past and you look at your W-2, you're going to see the box where it says Social Security taxes withheld from your paycheck, as well as Medicare taxes withheld. It is a flat percentage. If you are an employee, it's 6.20 for your Social Security contribution and 1.45 for Medicare. Unfortunately, as a self-employed, you pay the entire amount, 15.3%. However, you get to deduct half of it as an adjustment to income. As mentioned, the federal income, this is income taxes, is progressive. Okay, so depending on how much money you make, the more you make, the higher the tax rate, the marginal tax rate you pay. But you pay in a progressive steps. You paid 10% on the first if you are a single filer, on the first $11,000 of taxable income, not not all your income. You get to deduct, the standard deduction, or if you itemize deductions and other adjustments, as if you have to pay your self health insurance, et cetera, et cetera. And then it goes from 10, 12, 22, so forth until 37 if you have taxable income over $626,000 if you're a single filer. This is how the income tax is calculated. Like I mentioned, when you file your tax return, you calculate the self-employment tax based on your business income, the net profit from a Schedule C. Since there's no questions and we're doing good on time, I'm going to walk you through an example based on actual numbers so that you can see the flow of family child care. This example assumes that the only source of income this individual has is income from providing services as a child care. No other sources of income. Is a single taxpayer with no dependents. So the gross income they received during the year in tuition was $150,000. Then all the expenses, such as advertisement, mileage, office, all kinds of supplies, goes into the expense section. And then this line 27B captures the rest. So 27B That's where you actually report the food, okay? Any accountings using subscriptions, all the other expenses are reported in more detail in this section listed here. They are up to 31,000. So this is where this number comes from. So your total expenses before the business use of the home was 49,000, leaving you with a profit of 100,000. Now we calculate the business use of home, and that was 20,321, and I have a snapshot of that too. Oh, no, I didn't add that. But that is calculated based on this person used about 40% of the business, was paying rent, about $35,000 in rent plus utility, about $5,000 a year, insurance, and the business use was 40%. So translated to be 20,320. So then now your net profit is $80,000. So that's what you're going to pay taxes on. So the first tax that is calculated on that amount is your self-employment tax. So we put that number here, 80,604 coming through from your Schedule C. They reduce it. They only compute Social Security and Medicare taxes on 92.35% of this number. That is an amount that the IRS came from, and that is just a random number they decided. That they were not going to tax you on 100%, only on 92.35. That is $11,389 of self-employment taxes, of which you get to deduct half. Then you add up all the income. So in here, your income, this is the 1040. This is a picture of the 1040. The income shows up as in this line. Then you get to deduct half of the self-employment tax. So your taxable income is going to be $74,909. Then you apply your adjusted gross income, I'm sorry. Then you apply the standard deduction. This single taxpayer does not itemize. They claim the standard deduction. This is something that is the IRS gives you. So the first $15,750 of income does not pay taxes. So you reduce your adjusted gross income by the standard deduction. And you also have a deduction for having a business, which is 20%. This is a huge deduction for self-employed individuals. So you actually get to deduct 20% of your business income for income taxes, not for self-employment taxes, but for income taxes, leaving you with taxable income of 47. So the income subject to self-employment taxes was the $80,000. Your taxable income after the standard deduction and the qualified business income deduction, it's 47,000. Tax on that is 5,441. It's about 10%. Then you add up your income taxes and your self-employment taxes, which came from a Schedule SE, which were 11,389. So your total tax liability for the year is $16,830. If you did not make any, because nobody's sending taxes on your behalf. So if you did not make any estimated taxes during the year, when you go and file your taxes, this is the amount of money you're going to owe. And it's a big shock for a lot of people, especially if you don't have dependents. If you have dependents, you may qualify for you will qualify for the child tax credits if the dependents meet the qualifications. And you can potentially also qualify for the earned income credit. So that's going to help you pay for your taxes. But if you have none of that, then you're responsible for $16,830 in taxes. That's why it's important that throughout the year, you know how much money you are making. You understand your tax situation as a whole, whether you're going to get some credits that are going to help you pay these tax liabilities. And if you don't, you're going to end up paying a penalty. Sometimes it's could be anywhere between 500 to 1,000, depending on how much you owe, that you didn't need to pay if you had sent estimated tax payments to the taxing authorities, both federal and California. So this is what confuses the most when you're self-employed. This tax is big. It's not the income tax, it's the self-employment tax. As you can see, income taxes were only 5,000, self-employment tax is 11,000. That's where the 16,000 come from. So that is, in a nutshell, how you, as a self-employed family childcare provider, pay taxes on that net profit. That's why we really encourage all of you to separate your finances. Do not mix personal and business, because then you're going to have a hard time at the end of the year trying to put together your profit and loss. It is very important that you track so that you're aware of what's going on and you're not sitting at the tax office with a surprise that you're not prepared to pay. It is also important to maintain good records, because if you are ever under examination and you do not provide substantiation, you're going to get those expenses disallowed, which is going to increase your taxable income. Taxes are not that complicated. It just takes a little time for you to review the forms, ask questions to your tax preparer. Don't just sign if you don't understand. Why do you owe that much? What can you do to lower their taxes? A good tax preparer is going to ask you questions, better questions, such as, do you have health insurance? As a self-employed person, you don't have anybody paying your health insurance. If you do, well, then let's include it. They'll ask you, do you plan to contribute any money to retirement instead of sending 16,000 to the IRS? Why don't you put some money on a retirement account that is going to lower your taxable income, lowering your tax liability? So you keep some of the money for yourself instead of sending the whole amount to the IRS. What can I do next year to prepare so that I don't have this type of, because it's going to put you at a negative. You're already beginning the tax year with tax debt, the new year with tax debt. So that's why it's very important. Childcare providers make good money. And the IRS knows how much you make. They do get those forms. So it's important that you keep good track of your expenses. So you claim all the deductions you're entitled to, and you lower your tax liability in as much as possible. So I'm going to stop the share to see if anybody has any questions.
I see here in the chat we got a question a little while ago from Eugenia. Is there a form where we can see how much we spend on food, gas, toys, presents, etc., etc.? I don't know if you had a form specifically for those items.
That, Eugenia, that would be your responsibility to keep. There is no form. I mean, we can give you an Excel where you can enter the information, but at the end, the information comes from you. So if you have a bank account that is for the business, it makes it easy, because you can look at the expenses throughout the year and you can see, okay, look at your receipts. I went to Target, I went to Walmart, I ordered it from Amazon. These are toys, this is equipment, these are office supplies, these are cleaning supplies. But you are the only one that knows how much you spend. And it's easy to lose track when you commingle business and personal, because it's very hard to substantiate and you present a receipt to the IRS that has all these, purchases, and some of them are business and some of them are personal. So it's going to be very hard for you to remember. So let's see.
Yes, I think she can clarify.
Let me re-explain. A form where we can see
what we can spend on toys, foods, etc.
So I'm not quite sure. I think I'm not understanding the question correctly. So let me ask you a question, and if you can put it in the chat. I don't know if they are allowed to speak, but if you can put it in the chat. Currently, when you go and buy, toys and food, do you have a business bank account?
It looks like I allowed Eugenia to talk. So maybe
Yes.
you can unmute. Hi.
Yes, I do. Thank you. Thank you. Yes, I do. My question is, every year we buy toys, presents. And I was wondering, is there a form where they tell us how much can we spend? Like
Hmm.
like the total for the year. Like if I buy toys for my 8 kids that I take care of, how much money can I spend for toys and also for birthday parties and for cakes and I know how much I spent, but I just want to make sure I don't go over the budget or I don't spend a lot and the IRS doesn't count it like a loss. I don't know if I
Well, that's
explained
a
myself.
very good, yes, actually you did. And thank you. That's a very good question.
Thank you.
Very good question. There isn't a limit. The IRS is not going to tell you how you run your business. However, what the IRS tells is that the business expenses have to be ordinary and necessary. Now, remember, you are on the business to make money, to make a profit. So if you spend a lot of money because you want the latest and greatest toys, you provide the meals for your kids are organic, high, gourmet style meals. As long as substantiate, you can tell the heirs, look, I want my parents to know that I provide absolutely the best possible care. Remember, that's eating into your profits. As long as you can substantiate the expense, then tell the IRS, I want to be known for a high-end childcare provider. My kids eat gourmet meals. They play with the latest and greatest toys. I train my employees yearly, and so my expenses are high. So that's okay if you can substantiate it. The IRS is not going to say no to you, but you are also a business owner and you got to be aware. Am I spending too much in this category? Because remember, instead of spending money on certain categories, why don't you open a retirement account and park the money there? It's going to lower your taxable income. So that instead of you having and showing more income, you're going to show less income, but you're keeping the money. You're not giving the money away to others. You're actually keeping the money for yourself. So no, you don't. The IRS is not going to tell you, oh, you're spending too much in toys. No, if you want to spend in toys, go ahead. It has to be ordinary and necessary. And if they feel that it's too much, they may send you a love letter saying, we would like substantiation. But if you have it, they will not disallow the deduction. So I hope that explains.
That makes sense. Thank you.
Perfect. Thank you for that good question. Eugenia. I put on the chat, but if anybody else has any more questions, please utilize the chat function or use the Q&A function. Both seem to be working just fine. If you have a question and maybe you're not sure how to explain it, maybe you could put that in the chat too. And I'm just learning now that I can allow people to talk if they need to. So if you'd like to come on mute and ask Marley maybe a question live, put it in the chat and I'm happy to give you permission to speak to Marley. But if not, I don't know, Marley, if you have anything else to add. We'll give everybody a minute or so to see if any questions come up. I do have like a slide or two to wrap us up about what's coming up next here at Weave. So I can kind of take over if no one else has any more questions, but maybe we can give everyone else a minute or two.
Yeah, my encouragement to all of you is keep good records. You may not understand, I know this is a lot of information in a very short amount of time. You may not fully understand how these taxes, income taxes, self-employment taxes are computed. However, you should understand your business finances. You should really know on a monthly basis, if not on a quarterly basis, how much money you really are making after taking all the deductions you're entitled to. If you rent, if you have filed taxes in the past, let me, Berenice, in the poll, how many of them is this their first year? There was about over 50% of them, I believe.
Oh, sorry, I was muted. Yes, it was. So at that time, we had 9 respondents. 6 out of the 9, this was their first time. 67% was their first time. It is their first time filing.
So when you go this year the tax preparer is going to ask you, and we can send you that worksheet, how the business use of home percentage is calculated. Then you can come prepared. Also, how you put together your income and expenses. You should be receiving, all of you should by now receive the Form 1099 from, if you work with programs. Let's see, do you have a form that you can send us? I have, okay, so here is, this is, let me share this form to see if this might help me open it up in my computer.
And yeah, while you open that up, just for the sake of the recording, the question is, do you have a form that you can send us with all expenses we need to keep track of, please?
I'm gonna drop it in the chat, okay? This might be useful for everyone. And then if you can grab that. So this is, and I'm also gonna put it in the, drop it in the chat. Let's see. How can I add my computer because it's not fitting me?
Let me see here.
Yeah, I'll send it to you and you can send it to them.
Sounds good, yes.
That. But, oh, let me see, I'm not sharing the right screen.
And then just so that you're aware, Marley, we do have 2 other questions to get to, but let's go ahead and finish this one off.
Okay, so okay, this is a form, okay, specific for daycare providers' income and expenses. It gives you recommendations on how to, really keep good records, plus a list of expenses that are ordinary and necessary for a childcare provider. It also has the rates, okay? So I'll email that. Berenice will give you this information. This is just a 2-page sort of specific for daycare providers and how to keep track of income and expenses and what's ordinary and necessary for that business. Okay, so then the next question is buying a car. Can I use it for tax deductions since it's going to be... So Nancy, this is how a vehicle, you claim a deduction for the vehicle. If you buy a vehicle that you intend for to be 100% business use, let's say that you buy a van, you put your business logo, you wrap the car with the name of the childcare, it has your information, phone number, and then the entire vehicle is all the seats in the back have car seats, etc., etc. And you're still required to keep logs, okay? Then you could potentially claim that vehicle, the purchase of the vehicle, and deduct all the expenses. Now, you have to keep really good records when you claim a vehicle to be 100% business use. You have to have the odometer from the beginning and the end of the year so that you can provide, if you are ever asked for, the entire miles you drove for the year in the log to substantiate where you drove for business. So if you have all that, you can actually buy a vehicle and deduct the actual expenses. The vehicle is depreciated, but you have interest, insurance, gas, repairs and maintenance, etc., etc. So by all means. However, if your vehicle that you're planning on purchasing is not going to be 100% business use, if it's going to be mixed use, where you use it for personal purposes as well as for business purposes, the same logic applies. You can still deduct all the expenses related to the business use percentage. You still have to keep track of all the miles that you drove during the year. So the best thing is to write the odometer at the beginning and at the end. It's really at the beginning of every year because you have the total miles driven for the year that way, and the business miles. So yes, vehicle business use is always deductible. Now, whether you have a 100% or a less than 100%, you need to track that.
We have a question about a car as well on the Q&A from Alma. What if I lease a car and use it for childcare and personal use? Can I still claim the miles for childcare or not?
Yes, if you lease a vehicle, same logic applies. You have to keep a log, okay? And you can either choose to claim the standard deduction or the actuals. But yes, what you need is a log with the miles that you drove for business and the total miles, because that's how you're going to be able to compute what's best for you if you're going to claim the actual expense or the standard. If you don't want to go through the hassle of keeping every gas receipt, same with meals. If you don't want to go through the hassle of keeping every single meal, then you can take both the standard meal and the standard mileage deduction. That way you don't have to deal with all this record keeping. So if you don't have receipts for toys and food, how did you pay for them?
Yeah, we have a
Alma?
question from Alma as well about receipts that she made less than 8,000. She did not keep receipts. Yeah.
And I took a child for 8 months. So could you recreate and maybe look at your bank statements, credit card statement? The food is easier, Alma. The food, you can actually use that log that I show. You don't need to actually, you can just look at the attendance records, fill out that form, and calculate based on the meal rate. So food is easy. You don't have to worry about that. The toys, that might be a little bit for you to dig through, credit card statements, maybe emails if you buy online, to try to recreate that. If you take the deduction because you have pictures of the toys that you bought, and if you are ever under examination, they may allow, because you have proof that you buy these toys. Unfortunately, you don't have the substantiation. I would be cautious. That's why it's very important. Keep a business bank account and keep those receipts. The only thing, like I said, that the IRS doesn't expect you to, because it's just too much of a hassle, is the meals. That's why they gave you that standard rate. So you don't have to, you can just claim that. However, like I said, you have a choice, because you may be spending more in food than what the IRS allows you through the standard rate, and you don't want to miss deductions that you are entitled to. So the better you are at keeping records, the easiest thing is that bank account. One bank account and one credit card if you want to use a credit card for the business. No personal transactions of any kind. If you have a business bank account, at the end of the month, you transfer the money from the business to the personal, and then you deal with paying your personal expenses from your personal bank account. I would not pay any home-related expenses. I would just compute what the business use of home is, so that you know how much to send in estimated payments. But the best thing is to separate business and personal for the direct expenses.
Perfect. Thank you, Marley. Let me quickly close my door because I have barking dogs. We still have a few minutes. I don't know if anybody has any questions left. These are quick questions, by the way. I think they're really benefiting the entire group. So if anybody has questions, again, feel free to use the chat. Feel free to use the Q&A. We'll give everybody another minute or two. But this has all been really, really helpful. I'm not a childcare provider, but I'm learning a lot about this. All good stuff to know. Perfect. Yeah, we got on the Q&A function, we just got a big thank you from Alma for all the information presented.
Remember, the more you understand, the more control you have of the taxes you paid. It shouldn't be a surprise. You should know already going into your tax preparation meeting what your tax liability is going to be. Not to the penny, but you should have a good idea, because you've been tracking year round. It looks like we have
a question from Olivia in the chat. If you buy a vehicle, can you deduct the payments?
The payments itself, Olivia, are not deductible. The way that you recover the cost of a vehicle is through depreciation. Now, in the year that you purchase the vehicle, if it's primarily for business use, you can actually depreciate the vehicle. You can accelerate the depreciation if you need to. Don't take a deduction, a large deduction on year one, and then on year two, you are left with a bigger tax liability. So if you buy a vehicle, the payments itself is not what you deduct. The interest portion of the payment, it is deductible, but the principal itself is not. A vehicle is recovered through depreciation. So indeed, and actually, sometimes it works out better because let's say that you buy a vehicle in December for the business, and you intend for this vehicle to be 100% use, a van to transport children. You bought it in December, you've made one payment. The vehicle is $50,000 and it's going to be 100% business use. And that year, your business just did so well that you have a large taxable gain, taxable income amount. You could actually accelerate the depreciation and claim the whole 50,000 as a deduction. Now, if you claim it in year one, the entire amount is going to lower your taxable income, but then you're left with no deductions in the future. That's why it's important to make informed decisions. So a lot of people say, man, if I should have known, I would have spread out the deduction over 5 years because the useful life of a vehicle is 5 years. So yes, you can, not the payments, but the depreciation of a vehicle. That's what I'm saying. You ask questions, work with tax preparers that are willing to answer every question that you have to make sure that you pay the least amount of taxes, and you also make decisions for the future that are going to be beneficial. But thank you. These are all good questions. These are all very good questions.
Okay, so I got a question from Alma. Can we call Marley to ask more questions later? Is that possible to get her phone number or no? I'm happy to, in my follow-up email, Marley is a consultant with Weave, a business advisor, and a quick bookkeeping consultant, I think is what your official title is. So she's available to meet with clients if you join some of our advisory programs. I'll send that information in the follow-up email. I know Marley is, really busy, but she's available as an advisor with us. So if anybody's interested in joining one of our advisory programs, you'd be able to meet one-on-one with Marley, and she can really help you take a deeper dive specifically to your business financials. So I'll put that information in the email I send you all later this week.
Yeah, there are advisory sessions that they can sign up for, right?
Correct. Yes. So I'm more than happy to send you all that information. There's a cost associated, but I think that's pretty.
Believe me, it's a lot cheaper than you would pay outside to get good information before you actually go to your tax person and get blindsided.
Yes.
It's better if you go, they'll take you seriously if you say, hey, I already know how this works. You will ask better questions and they will take you. It's like, wow, this person knows what they are doing.
Exactly. That was going to be my point, is that from what I've heard, they're pretty affordable sessions. So yes, Marley's available. We are reaching the end of our session. If you have a life insurance, can you deduct the payment? I don't know, Marley, if that's something you can quickly answer.
No, that's a personal expense. A life insurance is a personal expense. That's not deducted as business expense. The only thing that you could potentially deduct is health insurance, for sure, long-term care health insurance, but not life insurance, because guess what? When you actually use that health insurance, it's not taxable. Benefits from a life insurance policy are non-taxable to the beneficiary.
Perfect. Thank you, Marley, for answering that. Okay, I'm going to, and again, if you have any questions, I'm going to email everyone a follow-up email. Feel free to reach out if you have any questions, and I'll see if we're able to support you. Let me quickly share my screen here. Okay. So just some final thoughts. And I do want to just say, I've been working at Weave about 6 years now, maybe the last 2 to 3 years working with a lot of childcare providers, and I just want to say thank you all for the work that you do. You all are amazing, and you do really, really important work in our community. So again, thank you for being with us. I know you're all really busy, so it's great to see you take an hour from your evenings to come and learn and to really invest in yourself and in your business. Quickly, I did want to share what's just coming up at Weave. We have a free Ikigai workshop on February 2nd and 9th. It is a workshop where you will learn how to rediscover your life's purpose and what is important to you. We have another free course that is going to be offered on February 10th. It is a free 9-week course where you learn all about digital marketing, how you can use the internet to promote your business. We also have a credit builder course, which is a free 6-week course starting on February 18th, where you will learn how to get started with credit or how to better your credit. And again, this is free. And then lastly, we have a financial empowerment class on February 9th and 26th. It's a free 3-hour financial workshop or class where you learn about your personal finances. I do want to highlight that all of the resources and classes that you see on my screen are entirely free. If you're interested, please reach out. I'm happy to get you registered for these upcoming classes and workshops. Please stay connected with We. We're a great resource for the community. Like I mentioned, a lot of our classes and our workshops are free. So please, follow us on Instagram or Facebook or LinkedIn. I'm going to drop on the chat the link to our website so you can learn more about the classes and the workshops that I mentioned. It's everything you can find on our website. You can also subscribe to our monthly newsletter. So yeah, that's a great way to stay on top of everything with Weave is our website or following us on socials. We are under Instagram and Facebook under Women's Economic Ventures. I don't know, Marley, if you have any parting thoughts before I end today's session?
No, I just wish everybody a great year in the business. I mean, now track your business income and expenses. Separate your finances. Do not mix business and personal. It's going to make your life a lot easier.
Exactly. That's a good parting thought. All right. Well, thank you so much, Marley, for being with us tonight. And thank you all to the providers who are here live. You'll get an email from me soon. And if anything comes up, reach out to us. We're always here to help. All right. Thanks so much, everyone. Have a good night.